right? You're back on the Morning Bell, and I'm here with Patrick Go Hard or Go Home Grove, Chief Rockstar of Catcha Media Group. Right, now let's talk about dollars and cents. Now, you mentioned just now, Catcha started out as a portal and search engine company,
Right.
but of course, we have seen so much changes over the years, and of course, there was the bubble burst.
Correct.
So what happened how did it affect you and your company?
So, Raj, at the time in the year 2000, we were trying to be the Yahoo of Southeast Asia, and that was the sexy online business model to
Right.
do. And so what happened is that we got approval to list on the Singapore Stock Exchange in April of 2000. We went on a global roadshow
Right.
at the end of April 2000, and whilst we were on, it's usually global, it's about 1 week.
That's right.
And during that week, Nasdaq crashed. Nasdaq literally was obliterated, and so we had to abort the roadshow midway. It was hugely embarrassing, and that was like the beginning of the end,
Right.
basically. And then the world fell into a recession for the next 2 years, and it was really tough times. And so we had to drastically scale back the business. I mean, we had 150 people across 6 countries.
Right.
In about 6 months, that ended up being 20 people in 2 countries.
Right. So basically, you had to reinvent yourself.
We
right?
literally had to reinvent the business.
Right,
yeah.
right. Actually, it could also be seen in hindsight as a blessing in disguise. Can you imagine if you had done this a month earlier, then you got everything sorted out, you listed, and then the crash happened? It would have been a bigger hit on your company.
So the way we look at it is that, I guess the way that we convince ourselves that it wasn't that bad is that sort of the subsequent 2 years after the crash,
Right.
we learned so much about how to run a business. I mean, when I started Catcha, I was only 24 years old, and really all I'd ever done before that was work at Arthur Andersen for 2.5 years. I mean, that's not where you learn to run a business. That's where you learn to do other people's accounts. And so it was when the market was in a recession.
Right.
We were broke.
Right.
We couldn't get any support from anyone. That's when you learn how to build a product that people want. That's when you learn how to sell the product.
Right.
That's when you learn how to collect cash from people who owe you money. That's when you learn how to delay paying the people that you do owe money. And that's almost like business 101.
The school of hard knocks, as they call it.
It really is the school of hard knocks. So it's now. We're in a place where we feel that we learned more in those 2 years than you would ever learn. Like if someone went and did a Harvard MBA, you would never even learn these kind of things.
It's all theory. You are learning it in the real world.
And so what we ended up doing is we launched our magazine business in 2001.
Right.
Today we're one of the largest magazine owners in the region.
That's right. You can see the whole host of magazines in front here right now.
And people won't believe that magazine business was launched with about 30,000 ringgit. And today there's something like 16, 18 magazines.
That's right.
But it's when you have very little, you get really creative about how to build from
how to stretch your dollar,
Correct.
right?
So I think that's where we learn a lot.
Now, interesting enough, after more than 10 years, you are currently akin to an investment group. How did that transformation, which started out from online portals to an investment group?
Correct. So I think what we found is that historically, it's no different, say, to Tony Fernandez and his AirAsia group.
Sure.
I mean, there's so many different pieces to that group. So I mean, the same thing happened to us. I mean, once we managed to get success in one of our business units, so the first business unit for us that was profitable and successful was our magazine business.
Media. You move into media.
Correct.
Right?
Correct. And then from there, then we realized, okay, you know what? We've kind of figured out a sort of secret sauce on how to make this business work, how to make this business grow. Let's leave the business with some really great managers, and let's then start focusing time on building another business.
Right.
And then right after that, then we started. Then my partner and myself started focusing time on building a company called iProperty.
iProperty, that's right.
Which is now publicly listed in Australia, hugely successful, does very, very well. And so we spent 1.5 years focusing on that business. So it's almost like every business it's almost like having another baby.
Right.
Like,
so you had the first one, now the first one's a bit grown up, right?
And as your baby becomes an adult, you don't need to spend so much time, on
supervision,
that.
right?
Correct. So I mean, I guess the way we look at it is that we I guess kept giving birth to a lot of babies.
You've been very productive,
so to speak. So I guess, and so today in the group, we'd have sort of 7 or 8 companies in the group. 3 of them are publicly listed. The balance would be private, and and we're pushing all those businesses as hard as we can, and all those businesses have great CEOs that run those businesses, and we're kind of at the sort of the level above, where we're almost like a coach to those businesses.
Right. So you mentioned iProperties, then later iCars came along. Then of course you have things like Dealmates as well, deal after deal after deal. Now I can see that it's all using, like for example, the internet platform or somewhat linked to that. Was that a strategy, given the fact that that's the way things are moving towards?
Yeah. So I mean, Raj, so we're huge believers in online, and I mean, when you study successful companies all over the world and companies that can grow really fast on I guess limited amounts of money, you keep reaching the same conclusion. It's got to be a digital business, whether it's digital media or digital advertising or digital commerce. Digital businesses grow tremendously fast. Whereas if you want to, and we learned this the hard way, if you want to grow, say, a traditional business like magazines, it takes a long time to launch a magazine, make it successful, and then launch another magazine, make it successful, and then take it to another country and make it. It just takes a long time. Whereas if you launch a website that works in Malaysia, you can very quickly layer that footprint on Indonesia or Thailand or Vietnam or Philippines. And so what we found is that online businesses just grow tremendously faster. So in terms of, in a world where you're starved in terms of human resources or how much time you can give to a project, we want a project to go from 0 to 100 within 3 months as opposed to 3 years. And online businesses are just the greatest platform to work with.
Right, yeah, makes a lot of sense. Now, the interesting thing is, previously over the years, you have, had these babies by yourself, and then you grew it up. But in recent times, you have adopted a different approach. In fact, we're talking about adoption right now. Rather than spend so much time building it from scratch, you see potential out there, perhaps you buy it over, or you perhaps collaborate. Is that
absolutely
the plan now?
Correct. So I mean, we've, to the point earlier where it takes so long to start from scratch. So we've found that if someone else has already done 2 or 3 years of really solid work in making their business work, proving that their product is viable, getting revenue in the door, they may not have a huge business, but they've already done the hard work. I guess they've already made the baby, so to speak. We love to come on board as a co-parent or
a nanny,
or as a nanny, go forward and work with that team to really accelerate and take that business to the next step. So I'll give you an example. I mean, another company of ours, which is called iCar Asia, which is building great car portals across Malaysia, Indonesia, and Thailand. I mean, that business IPO'd on the Australian Stock Exchange. It's an Asian business, IPO'd 9 months ago. But we didn't. That business was comprised of a popular website in Malaysia, popular website in Thailand, popular website in Indonesia. We didn't start any of those websites. Other entrepreneurs started those websites, and they did a phenomenal job in getting them to where they are. And what we said, we basically went and said, look, let's all come together and build a Pan-Asian group. Let's all be shareholders together in one big group, and let's take this and let's work together to really accelerate all the great work that you've done, and that's exactly what happened.
Now, another interesting thing you just mentioned is all these companies are Asian-centric, Southeast Asia, but 2 of them, iProperties and iCars, are listed on the Australian Stock Exchange. So how does that work?
So it's for us. I mean, it's the businesses are all HQ'd out of Malaysia. The CEOs are based in Malaysia. Bulk of the revenue all of the revenue come from ASEAN. We look at it is Australia is just where we capital raise. Australia is solely where we raise funding. So it's got nothing to do with being an Australian business. We've just found that Australia are huge advocates for investing in successful technology companies, whereas we've found in, say, Singapore, Malaysia, and Hong Kong, it is really hard to raise funding for a good internet business.
Right. The fact that the Australian dollar is so strong also is a bonus, isn't it?
Doesn't hurt.
Now, you mentioned that, of course, everyone is headquartered in Malaysia, all the CEOs and all that. But interesting enough, Catcha Group is a Singapore-registered investment firm. The rationale behind that?
Yep. I mean, no amazing rationale. But I mean, it just simply was when we first started the business 13 years ago. We started the business in Singapore, and then about 3 or 4 years later, shifted the business to Malaysia. But it just so happened that the corporate structure started off as a Singaporean company.
Okay, we talk about the IPOs in Australia. Now, the great thing is Catcha is actually listed on the Malaysian Stock Exchange as well. I think it was listed in 2000.
It was listed in 2012.
2012,
Correct.
that's right, sorry.
Yes.
2012. So how has it been? I've noticed that the stock prices in recent times have done remarkably well.
So so I mean, it's like a, imagine a roller coaster.
Right.
Like the share price is like that, and so but you're right. I mean, in the last 3 months, the Catcha Media Berhad share price
That's
is
right.
probably up 100%.
Exactly.
And,
Amazing.
and I think it's because I guess it takes a while sometimes for a market to understand what you're doing. And the market has seen the success of iProperty. They've seen the success of iCar. And they've seen that Catcha Media will follow in those footsteps. So I mean, Catcha Media is performing tremendously.
That's right.
Our core media business is hugely profitable and is growing year on year. The car classifieds business that Catcha Media owns a stake in is growing phenomenally. So I think the analysts that are starting to follow the company are seeing that and writing really strong research reports on the company. Right.
I think in recent times there's a lot of mergers and acquisitions. It's like Catcha is really on a very aggressive trail right now.
Correct.
I think recently there's one deal with say.com.
Correct.
Can you share with us a bit more about the rationale with regards to that deal?
We're so bullish on the online space. So I mean, when you look at online in South Asia, I mean, there's something like at the moment maybe 100 million internet users in Southeast Asia right now. But that's forecast to go from 100 million to 600 million. Over the next 5 years. So when in any sector when you're growing by sixfold over 5 years, I mean, that is something that we want as much of as we can. And back to the point earlier, we can't start companies fast enough.
Right.
It just takes a while to start a company. Whereas if people have great businesses, we're happy to partner with them. We're happy to work with them to take those businesses to another level. I mean, we believe so strongly, particularly in the media world, that 1 + 1 = 3. So if you can put pieces together, and why not? So what we've done recently is that our MSN business and our magazine business has merged with a company called Says.com, which is a phenomenal business built by amazing entrepreneurs, and we're really, really excited to put those businesses together and come up with an integrated media product that we believe is just going to be absolutely fascinating.
Right. And to put some numbers to that, I think earlier this year you actually mentioned that Catcha is going to invest 500 million over the next 5 years in online businesses. That's a phenomenal sum of money.
It is. It's a huge amount. And it was one of those things that we just wanted to, we wanted to make a commitment. Right. We wanted to make a statement, and we wanted to share with people that we're serious players in this space. We've been in the online space for 13 years now, and we're not going away. But I think it was also us kind of helping to communicate to the community at large that we've never been more bullish about online businesses in Asia than in any of the preceding years of business. We think all of the macro factors are right.
Right.
We want to invest every dollar we have into growing businesses we already have or businesses that we want to partner with in the next 5 years. So look, we wanted to make the statement, and it's been great, and we've been getting feedback from a lot of people saying, yep, we agree with you completely. We want to invest money in online businesses as well.
Now you have such a strong foothold in ASEAN already. I understand that now you're looking further abroad, perhaps the Middle East market right now. So that's something very interesting as well.
Correct.
What are you looking to do there?
So we, we really love emerging markets. So any market in the world that is emerging from an internet perspective is a market that we believe we get, we understand it. It's similar to Malaysia. It's similar. So iProperty, which has been one of our main companies, has done phenomenally well in Malaysia, and we saw an opportunity to invest in the iProperty of UAE, of the Middle East, and we knew the team really well there. We like what they've done. We said, look, if there was an opportunity for us to partner with them, let's do it, and there was, and so we took that opportunity.
Wow, fantastic. Now, last question. The final frontier, China, 1.7 billion population.
A lot.
That's right, huge market there. So, Catcha, I'm sure you had your eye on there. I mean, are you still assessing the situation, looking for the right opportunity?
So China is huge opportunities, huge online opportunities. At the moment, we have just got so much on our plate in Southeast Asia and a few other emerging markets that we're very comfortable. Southeast Asia is our sweet spot. China is, we work with a lot of Chinese internet companies.
Right.
But look, there's no plans to do anything aggressive in China. We believe in the 500 million commitment that we made.
That's right.
We believe in Southeast Asia alone, there's enough to keep us busy for the next several years.
Fantastic. All right, I understand that Catcha's AGM will help next week on the 27th.
Please come.
Yes, I would love to. Just round the corner from my place. Any interesting news which you can share with us with regards to it being announced next week?
At the AGM, I think at the AGM we'll be approving the auditor. I think we'll be approving CEO's salary. I think we'll be.
I like that, the CEO salary.
It's
pay increase.
Look, it's unfortunately it's a pay decrease, but
oh no.
which is fine. It's a very routine annual meeting. Nothing sexy. So,
Nothing sexy. Oh shucks.
No. I'll let you know like next time.
Right. Fantastic. Fantastic. All right. So, if any of you who would like to know more information with regards to Catcha, for information, about over a month ago, the share price was a mere 45 cents. Closing yesterday was 60 cents, and I think that the high was about 71, 72 cents.
Correct.
So massive potential there. Apparently, it can hit targeted prices up to 92 cents to $1. So still lots of potential there for those of you who like to invest in a strong company. Now, right after this break, we're going to talk about something closer to Joanne's heart. We're going to talk about Patrick's love life and what's the latest goss on him. So if you want to find out more about that, you know you got to stick around here on the Morning Bell.